Every major currency collapse follows the same 7 stages. Rome took 200 years. Britain took 30. The USSR took 5. The dollar is at stage 5 right now. And nobody's talking about it. Here's what they're not telling you. The US dollar has lost 98% of its purchasing power since 1913. That's 111 years of systematic devaluation, but the final stages happen fast. Extremely fast. In 1991, the Soviet ruble was the official currency of a nuclear superpower. By December of that year, it was worthless. 6 months. That's all it took for complete collapse. The British pound lost reserve currency status between 1945 and 1976. 31 years of decline, then acceleration. The dollar entered stage 5 in 2020. You're watching the endgame right now. Let me show you exactly how this works. Every currency collapse follows an identical pattern, 7 distinct stages, each one predictable, each one documented, and each one more dangerous than the last. Stage 1, overextension. The empire expands beyond its means. Stage 2, debasement. They dilute the currency to finance deficits. Stage 3, loss of confidence. Foreign holders start dumping. Stage 4, crisis measures. Emergency policies that make it worse. Stage 5, acceleration. The decline becomes exponential. Stage 6, panic, capital flight, and hyperinflation. Stage 7, collapse, complete currency failure. The Roman denarius went through all 7 stages between 64 AD and 301 AD. Silver content dropped from 95% to 0.5%. The British pound went through the same cycle from 1914 to 1976, lost 99.5% of its gold backing. The Soviet ruble collapsed through all 7 stages between 1985 and 1991. The US dollar entered stage 1 in 1971 when Nixon closed the gold window. It hit stage 2 in 2008 with quantitative easing. Stage 3 arrived in 2014 when Russia and China started bilateral trade in yuan. Stage 4 came in 2020 with $4.5 trillion in money printing. We're in stage 5 now, the acceleration phase. And here's what that means for you. Your savings are being systematically destroyed. Your purchasing power is evaporating. And the transition to stage 6 could happen in months, not years. This is happening right now. Let me show you the exact timeline and what you need to do. To understand why currency collapse is so dangerous, start with what money actually is. Money is stored labor. When you earn a dollar, you're storing your time and energy. When that dollar loses value, you've lost that time forever. You can't get it back. Most people think currency collapse means your money becomes worthless overnight. Here's the reality. Currency collapse is a process, not an event. It happens in stages. Each stage transfers wealth from savers to debtors, from citizens to governments, from the middle class to the asset-holding class. The mechanism is debasement. Let me show you how it works. When Rome controlled the Mediterranean in 64 AD, the denarius contained 95% pure silver. It weighed 3.9 grams. That coin could buy a day's labor, a bushel of wheat, or a gallon of wine. Real purchasing power, real stored value. By 250 AD, the denarius contained just 5% silver. Same coin, same name, 95% less value. By 301 AD, Emperor Diocletian issued the edict on maximum prices because inflation had become catastrophic. Prices had increased 1,000% in just 20 years. The currency had effectively collapsed. But here's the key. The Romans didn't wake up one morning with worthless coins. It took 237 years, generation after generation, watching their purchasing power erode. Each debasement seemed small. 5% less silver here, 10% there. Until suddenly it wasn't small anymore. The British pound followed the exact same pattern. In 1914, 1 pound sterling equaled 4.86 US dollars. It was backed by 113 grains of pure gold. The British Empire controlled 25% of global GDP. The pound was the world's reserve currency. By 1949, that same pound equaled just $2.80. By 1967, it was $2.40. In 1976, Britain had to request an IMF bailout. The pound collapsed to $1.57. It lost 68% of its value in just 9 years. The reserve currency was gone. Now, here's what most people miss. Britain didn't become poor overnight. They went through the 7 stages. Stage 1 was World War I overextension. Stage 2 was leaving the gold standard in 1931. Stage 3 was the 1945-1950 period when foreign holders started dumping sterling. Stage 4 was the 1964 sterling crisis. Stage 5 was 1967-1976 acceleration. Stage 6 was the 1976 IMF crisis. Stage 7 was complete loss of reserve status. The USSR went through all 7 stages in just 6 years. Let me show you the timeline. Stage 1, 1985. Gorbachev's reforms created massive budget deficits. Stage 2, 1987. The government started printing rubles to cover shortages. Stage 3, 1989. The black market ruble rate diverged 300% from official rates. Stage 4, 1990. Price controls and rationing. Emergency measures. Stage 5, 1991. January to August. Exponential money printing. Stage 6, 1991, August to November, complete panic and capital flight. Stage 7, 1991, December, total collapse, new currency required. In January 1991, the official exchange rate was 1.8 rubles per dollar. By December 1991, it was 170 rubles per dollar, a 9,344% devaluation in 12 months. Lifetime savings destroyed, pensions worthless, entire life's work erased. This is not ancient history. This is the documented pattern of every major currency collapse in recorded history, and the US dollar is following the same path right now. This has happened before. Let me show you the most important example. April 5th, 1933, Executive Order 6102. Here's the setup. The United States was in the Great Depression. Unemployment hit 25%. GDP collapsed 30%. Banks were failing nationwide, and the dollar was backed by gold at $20.67 per ounce. Fixed. By law. President Roosevelt faced a choice: honor the gold standard and let the depression continue, or break the gold standard and inflate. He chose inflation. On April 5th, 1933, Roosevelt signed Executive Order 6202. It made private gold ownership illegal. Citizens had until May 1st to surrender their gold to the Federal Reserve. The penalty for non-compliance was $10,000 in fines or 10 years in prison, or both. Americans complied. They turned in their gold. The government collected 300 tons. Then on January 31st, 1934, Roosevelt revalued gold to $35 per ounce overnight by decree. Here's what that meant. The dollar was devalued 69% against gold. Anyone who held dollars lost 69% of their wealth. Anyone who held gold would have gained 69%. That's why they made it illegal first. The government confiscated the gold at 2067s, then they revalued it at $35. The federal government made $2.81 billion on the transaction. That's $64 billion in today's dollars. Pure transfer of wealth from citizens to the state. But here's the mechanism. Roosevelt claimed he needed to stabilize the economy. He said the gold standard was causing the depression. He promised this was temporary, a crisis measure. All of it was a lie. The real goal was to inflate the money supply without gold backing. Between 1933 and 1934, the money supply increased 28%. Prices increased 20%. Workers' wages increased 0. Real wealth was transferred from savers to debtors and from citizens to government. Who won? The government cleared its debts. Banks got bailed out. The wealthy who owned real assets saw values increase. Who lost? The middle class, workers, retirees, anyone holding dollar-denominated savings. And here's the key detail everyone forgets. In 1933, the government promised gold confiscation was temporary. They said citizens could buy gold again when the crisis ended. They made private gold ownership legal again in 1974, 41 years later. By then, gold was trading at $183 per ounce, up 886% from the 2067 confiscation price. An entire generation lost their opportunity to protect their wealth. Their children and grandchildren paid the price. The same pattern is repeating right now. In 2020, the Federal Reserve printed $4.5 trillion in 18 months. That's more money than existed in the entire US economy in 2000. In 2021, inflation hit 7%. In 2022, it hit 9.1%. Your purchasing power dropped 16% in 2 years, and they called it economic stimulus. It's happening again, stage by stage, and we're further along than most people realize. Here's what's happening right now. 5 major developments in the last 48 months that signal stage 5 acceleration. March 2020 to December 2021. The Federal Reserve expanded its balance sheet from 4.2 trillion to 8.9 trillion. That's a 112% increase in 21 months, the fastest monetary expansion in US history outside of a world war. But here's what matters. That money didn't go into the real economy evenly. It went to asset holders first. Stock market up 70%, and real estate up 45%. Bonds got bought directly by the Fed. Meanwhile, your wage increased 3% if you were lucky. This is the mechanism. When the Fed creates money, it buys government bonds and mortgage-backed securities. The sellers are banks and wealthy institutions. They get the fresh money first. They buy stocks and real estate. Prices rise. By the time that money reaches you through wages, everything already costs more. You lost purchasing power. They gained assets. This is not conspiracy. This is Federal Reserve policy. January 2024, the BRICS nations announced 23 new member countries. That's 45% of global population now outside the dollar system. But here's the critical part. They're building alternative payment systems. China and Russia trade oil in yuan and rubles. Saudi Arabia now accepts yuan for oil sales. The UAE set up a UN clearinghouse in Abu Dhabi. India and Russia use rupees and rubles. Brazil and China trade directly without dollars. In 2001, the dollar represented 73% of global foreign exchange reserves. By 2023, it was down to 58%. That's a 20% decline in market share. And the pace is accelerating. Every quarter, more countries announce bilateral trade deals outside the dollar system. When demand for dollars falls, the value falls. Basic economics. And demand is falling faster than any time since 1944, December 2024. U.S. national debt hit $36.2 trillion. That's 123% of GDP. Interest payments alone cost $892 billion in 2024. That's more than defense spending, more than Medicare, the third largest line item in the federal budget. But here's the problem. Interest rates rose from 0.25% in 2020 to 5.5% in 2023. The government's debt service costs tripled in 3 years. They're now paying 22% of all tax revenue just to service the debt, not pay it down, just pay the interest. At current rates, interest costs will hit $1.7 trillion by 2034. That's 35% of all tax revenue, mathematically unsustainable. There are only two solutions, default or inflate. They will choose inflation. They always choose inflation. March 2023. Silicon Valley Bank collapsed. $209 billion in assets. The second largest bank failure in U.S. history, followed immediately by Signature Bank. $110 billion in assets. Then First Republic, $233 billion. In 3 weeks, over $500 billion in banking assets failed. The FDIC had just $125 billion in insurance funds. They couldn't cover it. So what happened? The Federal Reserve created a new emergency lending facility. They printed the money to bail out depositors. This is stage 5 behavior, emergency measures that require money printing. Each crisis forces more inflation. Each bailout devalues the currency further. The cycle accelerates. Central banks bought 182 tons of gold in 2022. Another 137 tons in 2023, and 144 tons in 2024. 3 consecutive years of record purchases. But here's who's buying. China added 400 tons. Russia added 350 tons. India added 200 tons. Poland added 130 tons. Every major non-Western central bank is accumulating gold and dumping dollar reserves. They know what's coming. When central banks buy gold, they're protecting against currency collapse. They see the same 7 stages. They're positioning for stage 6. Meanwhile, the US government holds 8,133 tons of gold, worth approximately $650 billion at current prices. Sounds like a lot, but remember, the national debt is $36.2 trillion. The gold covers just 1.8% of the debt. Not enough to back the currency, not enough to restore confidence, not enough to stop the collapse. This is not conspiracy, this is policy. These are public actions by governments, central banks, and major institutions. They're preparing for stage 6, and you're watching it happen in real time. Here's exactly how this works. Let me walk you through a collapse scenario with specific numbers. Let's say you have $100,000 in savings right now. That's the starting point. Now watch what happens as we move from stage 5 to stage 7. Inflation runs at 5 to 7% officially. Real inflation is closer to 10 to 12% when you include food, energy, and housing. Your $100,000 loses $10,000 in purchasing power per year. After 3 years, you're down to $73,000 in real value. You've lost 27% without touching your savings account. But here's the mechanism. The Fed keeps printing to fund government deficits, currently running at $1.7 trillion per year. That's 6% of GDP. Every dollar they print dilutes your existing dollars. Basic monetary physics. Something breaks. A major bank fails. A debt auction fails. A geopolitical crisis cuts off trade routes. Doesn't matter what triggers it. What matters is the response. The government and Fed panic. They print $5 trillion in emergency measures. The money supply increases 30% in 6 months. Inflation explodes to 20 to 25% annually. Your $73,000 in real value drops to $55,000 in just a year. But now the acceleration kicks in. When people see 20% inflation, they stop holding cash. They buy anything tangible: cars, houses, food, gold. This increases velocity of money. Prices rise faster than the money printing. You're losing 30-40% per year now. Your $55,000 drops to $35,000 in real terms. You've lost 65% of your original purchasing power in just 4 years. Foreign holders dump dollar assets. The Treasury auction fails. The Fed prints $10 trillion to buy government bonds directly. Hyperinflation hits 100-200% per year. Your remaining $35,000 in real value drops to $12,000 in 1 year. Then comes the currency reform. The government issues a new dollar. Exchange rate, 10 old dollars for 1 new dollar. Your $100,000 in the bank becomes $10,000 in the new currency. You've lost 90% of your wealth. This is the mechanism. Each stage transfers wealth upward. Each stage happens faster than the last. And each stage is impossible to reverse once it begins. When X happens, Y follows. When the government runs deficits, they print money. When they print money, inflation rises. When inflation rises, foreign holders sell. When foreign holders sell, the currency weakens. When the currency weakens, import prices spike. When import prices spike, inflation accelerates further. It's a feedback loop, a death spiral, and breaking the spiral requires severe austerity, massive spending cuts, entitlement reform, political suicide. So they don't break it, they ride it all the way to stage 7. That's what history shows. That's what the data predicts. That's what's happening right now. Who wins and who loses in a currency collapse? Let me show you exactly who comes out ahead and who gets destroyed. Debtors with fixed rate loans. If you have a 30-year mortgage at 3%, inflation destroys your debt burden. Your $400,000 loan becomes worth $100,000 in real terms when the currency collapses. The bank gets paid in devalued dollars. You keep the house. Hard asset holders. Anyone who owns gold, silver, real estate, farmland, or productive businesses. These assets maintain or increase value during currency collapse. Gold went from $850 in 1980 to $2,000 in 2024. Real estate in stable areas doubles or triples in nominal terms. Government and large corporations. They hold debt denominated in the collapsing currency. Inflation erases their obligations. A corporation with $10 billion in dollar-denominated debt just watch that debt lose 50% of its real value in the last 4 years. The top 1%, they hold assets, not cash. Stocks, bonds, real estate, private equity. When the Fed prints money, asset prices rise first. The wealth gap explodes. Between 2020 and 2024, US billionaire wealth increased 70%, from $3.4 trillion to $5.8 trillion. Foreign creditors who exit early, China, Russia, and other nations that dumped treasury bonds before the collapse. They sold when rates were low. They converted to gold or other currencies. They locked in gains before the crash. Cash savers. Anyone holding dollars in checking accounts, savings accounts, or money market funds. You lost 16% in 2021-2022 alone. You'll lose another 50-70% by stage 7. Your life savings evaporates. Fixed income retirees. If you're living on Social Security or a fixed pension, you're ruined. Your $3,000 monthly check buys $3,500 worth of goods today. It'll buy $500 worth by stage 7. Your purchasing power collapses while your income stays fixed. Bondholders. Anyone who bought treasury bonds for safety gets destroyed. A 10-year bond yielding 2% loses 50% of its value when inflation hits 10%. You locked in negative real returns for a decade. The middle class. You earn wages that don't keep up with inflation. You hold savings in dollars. You can't afford real estate after prices doubled. You're getting crushed from both sides. Workers on salary. Your wage increased 3 to 5% per year if you're lucky. Real inflation is 10 to 12%. You lost 7% of your purchasing power annually. Over 4 years, that's 28% gone. Your standard of living dropped 28% while working the same job. Small business owners with dollar-denominated savings. You saved cash to expand your business. That cash lost 40% of its value in 4 years. Your expansion plans are dead. The pattern is clear. Asset holders win, cash holders lose, debtors win, savers lose, the wealthy win, the middle class loses. You lost 16% of your purchasing power between 2021 and 2022. You're losing another 5 to 7% per year right now. By stage 7, you'll have lost 70-90% unless you act. The wealth transfer is happening. The only question is which side you're on. Here's what you need to do now. 5 concrete steps to protect yourself before stage 6 hits. First, convert 10-20% of liquid savings into physical gold and silver. Why? Gold and silver are money in every currency collapse in history. When the dollar fails, precious metals maintain purchasing power. Target 15% of your liquid net worth in physical metals, not ETFs, not mining stocks, physical coins and bars you can hold. Buy 1-ounce gold coins, American Eagles or Canadian maple leafs. Premium is 3 to 5% over spot price. Store them securely at home or in a private vault, not a bank safe deposit box. Banks close during currency crises. Silver is more volatile but cheaper to enter. Buy 90% silver coins, US quarters and dimes minted before 1965. These are recognizable and divisible. Target $5,000, $10,000 minimum position. Second, eliminate high-interest debt and consider strategic fixed-rate debt. Pay off credit cards immediately. Interest rates of 18 to 24% will destroy you faster than inflation helps. Pay them to 0, but consider keeping or taking on fixed-rate mortgages below 5%. Here's why. Inflation erodes the real value of your debt. If you locked in a 3.5% mortgage in 2021, inflation is paying down your loan for you. Your $400,000 debt is worth $320,000 in 2021 dollars today. Don't take on variable rate debt. Don't take on high interest debt. Only fixed rate debt below inflation rates. Third, move 30-40% of assets into productive real assets. Real estate that generates rental income, farmland, productive businesses, equipment, tools. These assets maintain value because they produce value. Focus on cash flowing assets. A rental property that generates 6 to 8% annual return. Farmland that produces food. A business that sells essential services. These survive and thrive during currency collapse. Avoid speculation. Avoid vacant land. Avoid businesses dependent on discretionary spending. Focus on necessities and income production. Fourth, build 6 to 12 months of emergency supplies. Food, water, medicine, fuel. When currency collapses, supply chains break. Store what you need. Rice, beans, canned goods, water filtration, basic medicines, fuel for heat and transportation. This isn't prepping extremism. This is basic risk management. In 1991, USSR, stores went empty for months. In 1946, Hungary, people couldn't buy food at any price. In 2008, Venezuela, supermarket shelves were bare. Spend $3,000 to $5,000 on long-term storage food. Another $1,000 on water filtration and basic supplies. Rotate and use it over time. Insurance you hope you never need. Fifth, diversify currency exposure. Open accounts with currency diversification. Swiss francs, Norwegian kroner, Singapore dollars. Strong currencies backed by stable governments with low debt. Use services like Wise or interactive brokers to hold multiple currencies. Target 20% of liquid assets in foreign currencies. Not crypto, not speculation. Strong sovereign currencies. Don't put everything in dollars. Don't trust a single system. Spread your risk across assets, currencies, and storage methods. These are not optional. These are essential steps before stage 6 arrives. And stage 6 could hit in 12 to 18 months. Position yourself now. The 7 stages of currency collapse are not theory, they're documented history. Rome took 237 years, Britain took 31 years, the USSR took 6 years. The dollar is at stage 5 right now, and the acceleration is undeniable. You're watching $36.2 trillion in debt, $892 billion in annual interest payments, and $4.5 trillion in money printing in just 18 months. You're watching central banks buy 1,000 plus tons of gold per year for 3 consecutive years. You're watching BRICS nations represent 45% of global population building payment systems outside the dollar. This is not conspiracy. This is policy. This is data. This is happening. The choice is yours. You can hope the pattern breaks this time. You can believe it's different this time. Or you can look at history and prepare. Every person who protected themselves during the 1933 gold confiscation did the same things. They held hard assets. They diversified. They prepared. The ones who didn't lost 69% overnight. Every person who survived the USSR collapse did the same things. They held food, fuel, and foreign currency. They built alternative income streams. The ones who didn't lost everything. Join our membership for detailed analysis, monthly updates on economic indicators, and early warning signals for Stage 6. Link below. We track the data you need to make informed decisions. Share this video with everyone you know, your friends, your family, your co-workers. They need to understand what's coming. The window to prepare is closing. Position yourself now, not next month, not next year. Now, 10 to 20% in gold and silver, fixed rate debt below inflation, productive real assets, emergency supplies, multiple currencies. Take action today. The links are below. Not financial advice. Do your own research, but do it fast. The clock is ticking.